health insurance basic principles. First of all, if you think about group health insurance, one of the first things you have to remember is you cannot get a group of people together just because you want to take out insurance. Say, hey, we're a group, now we're going to get group insurance. Can't do it. It's against the law. There is something called a master policy when you take out a group health policy. The policy is actually between usually the employer or whatever group, is sponsoring the people and the insurance company, and there's that master policy. And then each individual who is covered in that group gets what is called a certificate of insurance. It's usually a one-page document, kind of recaps. It says who's the insured, what's the amount of benefit, if there's beneficiaries, the date of the coverage, things like that. It's just a one-page kind of synopsis of what the coverage is for the person. It follows group underwriting rules. Group is always going to have a lower premium cost than individual coverage because they can spread the risk out over that larger group of people, that law of large numbers. They like that a lot. There's two different ways that people can contribute in a plan like this. There's a contributory plan and there is a non-contributory. Non-contributory, for example, means that the employer is going to cover 100% of all of the employees. That is called non-contributory, and 100% have to be covered. Now, if the employees are going to share in the cost of premium, then it's called a contributory plan. And with a contributory plan, at least 75% of all eligible employees have to take the coverage. What do they mean by eligible? Easiest one to remember, usually one of the biggest dividing factors on who can be covered and not is, are you a full-time employee instead of a part-time employee? A lot of times part-timers are not offered this kind of benefit. So for eligible, you would have to, for example, be a full-time employee. And then if so, 75% of those employees must take the plan, and you're going to share in the premium costs. What are the types of eligible groups who could take advantage? Employer-sponsored plans, like we think of as benefits at work, is probably the biggest group or the largest types of plans out there. Very, very popular. They're a wonderful benefit for employees. And a lot of times employers will offer these plans as a way of retaining good people in the business. Then you have something called a MET, which is a multiple employer trust, or an MEWA, a similar type of group. These kinds of groups, they're trusts that are formed to get insurance, to acquire insurance. But the thing to remember, on a MET, for example, they have to be in the same industry. For example, maybe you've got a couple of 3 or 4 or 5 small little printing companies, and they form a MET in order to get benefits for all the people in those particular companies that join together. So they have to be in the same line of business. So remember that. And then you also can sometimes get group benefits through creditor groups as well.